Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Empire Fintech Conference in New York City. Joining us for this segment, we have Alex Steinberg Barrage, partner at Davis Wright Tremaine. We're going to discuss why other areas of the world are ahead of crypto regulation relative to the U.S. Alex, it's great to have you with us. Welcome to Trade Talks.
Thanks so much for having me, Jill.
You got it. Like everything else, crypto regulation is becoming more polarized issue. In Congress, it seemed to be that there was some positive movement there. What's changed? Why has this happened that we're kind of taking a step back?
Well, we've seen progress in fits and starts. We're still into our new Congress. And we've seen some bipartisanship, especially on stablecoin legislation. But when we listened to the stablecoin hearing, we noticed early on that maybe there wasn't as much of a connection point as we had originally thought. So this idea of bipartisanship is a healthy and good thing, but we just haven't seen the results of that. Of course, the stablecoin bill is just one of a number of different bills that are currently out there. What's changed? Well, we have new leadership, and we're also coming off of a really bad year for crypto in terms of public bankruptcy filings, a lot of headlines in the news about mismanagement and fraud, a lot of contraction in the sector, in part because of those things, and a lack of regulatory clarity here in the U.S. that would help companies know what the guardrails are and hopefully build and scale in the way that they want to. So lots of different forces at play currently.
It seems kind of counterintuitive if you want to get risk management under control and make it a safer environment for investors. You might want those guardrails, or at least provide these companies with some sort of regulatory framework, because if there is no framework, they're going to,
Yeah, well, I think that is logical.
Right.
I think we've seen shifting tones in terms of the broader administration. Early on last year, we saw thoughtful reporting come out of some of the agencies and, of course, the White House, signaling the potential promise of crypto innovation, but also highlighting the risks. I think after this year, especially in light of these bankruptcy filings and the broader headlines, I've noticed a shift in tone. I've noticed a lot more enforcement-based measures on crypto coming out of multiple agencies, including the SEC, the CFTC. On the banking agency side, there's a lot of emphasis on really calling out the risks that bank regulators see around things like banks having relationships with crypto companies, and what could that mean for the volatility associated with their deposits. So there's been a lot more attention on crypto, but I would say that in general, the discussion about potential benefits has kind of come off to the side, and the focus now is increasingly on potential risks, whether those be safety and soundness risks, financial stability risks, etc. So there's been definitely, I think, a noticeable shift.
In the meantime, other parts of the world are implementing viable crypto frameworks. I mean, the European Parliament just passed MiCA last week. I mean, that was a historic achievement. Why are other parts of the world ahead of the U.S.?
It's a great question. It's not a simple answer. You could say, well, different countries have different regulatory frameworks. Maybe that's what makes them more efficient at doing legislation. But I think that there's something else at play, which is that a lot of other countries are kind of jostling for the opportunity to be real leaders in innovation. And in order to do that, they also realize that they have to have sound guardrails for the industry. And they can't lead with an enforcement-only kind of strategy. And so MiCA is a really, as you said, historic achievement. Other parts of the world, Singapore and the UK, have done similar things to advance regulation for different parts of the crypto industry. I think another thing that other countries realize is the importance of consumer protection and making sure that individuals who want to invest or dabble in crypto are going to be protected. And I think that possibly is one thread that could unite regulators and legislators here in the United States. The idea that, yes, there is a lot of fraud, but there's a real need to protect investors, businesses, and consumers who want to continue just playing in the crypto space, because crypto isn't going anywhere. So I think the collective will outside our borders is there. I think there's been definitely more attention paid on risks, but we've seen better results in terms of frameworks that have passed Parliament and other and other regimes.
Where do you think the U.S. federal regulatory framework is going?
I would like to be a lot more optimistic about that. At the moment, I feel like we're kind of at a standstill. I see elements of bipartisanship, but I also see us going back to the drawing board. There are factions within U.S. Congress that are trying to form anti-crypto coalitions. So it's starting to be, I think, even more politicized than it ever was. Personally, I don't think anti-crypto coalitions get at this bipartisanship idea of protecting consumers, which is what everybody should really care about. And so those kinds of initiatives give me pause.
Right.
But I think if you take a long-term view, maybe 2-3 years, and hopefully I'm not being too conservative there, we will start to see more leadership, or better leadership, and more work across party lines to do the things that we really should be doing along with the rest of the world. So that's my hope. It's a long-term optimistic one.
Cautiously optimistic, as we say.
Fair.
I think we always tend to think very U.S.-centric, right? But there are other parts of the world, particularly Southeast Asia, where it's not just a trading vehicle for them, where there's no legacy banking institutions. This really is a way to transact and do business, when even just opening up the economy more.
I think that's right. And traditionally, the incumbents have led the access to payment rails. And those incumbents are primarily banks. Other parts of the world are looking to other kinds of payment rails, whether they be private stablecoins or even in some countries, CBDCs. So we're looking at efforts across the world at coming up with complements to money as we know it. And I think that's where the interesting discussion is going to be. How many different types of money, what is the future of money, and how we're going to use it in the future? And where is blockchain and all of those important developments, how are they going to play a role? It's already happening. Yeah. Payments are being unbundled as we speak, and it's borderless. So maybe it is just a matter of time before we see that here, but I'm taking a long-term view on that.
All right, Alex, appreciate the insight. Thanks for joining us on Trade Talks.